We've been getting more and more investor interest in triplexes in Toronto, so we did a quick check on Google Trends. And it seems like what we've been seeing on our end is reflective of what's been happening across Canada. Just like how the amount of savings in bank accounts have spiked during the pandemic, real estate investors are also more conservative these days with their real estate investments and gravitate towards investments with better cash flows. And intuitively, that would be buying a triplex instead of a duplex or a house instead of a condo. Now, I talked about houses versus condos before, but I realized I've never touched on triplexes versus duplexes yet. So in this video, I'll reveal how returns compare between a Toronto triplex versus a Toronto duplex and when you should be investing in one versus the other. If you like videos like this, hit the thumbs up button for us and don't forget to subscribe to our channel so you don't miss other videos like this made specifically for real estate investors in Toronto. So it's actually not that easy to get the appreciation rate specifically for triplexes in Toronto since there's no public database for it. So we ended up gathering our own data for this analysis. Now, what we found was that over the past 5 years, triplexes in Toronto saw an average annual appreciation of 11.8% per year, which is amazing. I think the numbers might be a bit skewed because of bigger gains in property prices over the past year, so I ended up going further out. Now, over a 15-year horizon, the annual appreciation for Toronto triplexes was 7.3%. Much lower, but still pretty impressive. So let's compare how Toronto semis did over the same period. We chose semis as a metric for duplexes because most duplexes in Toronto are essentially single-family homes with a secondary suite, and the more popular ones are semis because they have a lower starting price. In the last 5 years, Toronto semis gained 12.2% per year. So that's 0.4% better than triplexes per year. Now, if we look further back in the last 15 years, Toronto semis beat Toronto triplexes by a bigger 1.2% in appreciation per year. So to put things into perspective, that's a 12% difference over 10 years. And after leverage of 4 times, that translates to 48% higher ROI for duplexes. The reason for this is simple. There are more semi buyers because they attract both investors and end users, whereas triplexes are solely traded by investors, and only those investors who can afford more expensive real estate investments. So because there is more buying demand in duplexes, there is better long-term price growth there as well. Now, on the rental income side, yes, you will have higher absolute cash flows with a triplex because you have more units. But since property prices are higher, is it actually higher as a percentage? For this part, it's important to remember that our current rental situation isn't completely reflective of long-term trends because COVID threw the rental market out of whack in Toronto. Most units saw a decline in rents in Toronto, but units with less bedrooms saw a bigger drop compared to larger units. Now, with this new info, you might be able to figure out what's happened in the last year. A typical Toronto triplex is more or less like a box. Each unit is around the same size with 2 bedrooms in each unit. 2-bedroom unit rentals got slammed with COVID, so triplexes saw a huge 15 to 20% drop in rents in the last year. On the other hand, duplexes usually have a bigger upper unit with, say, 4 bedrooms and a smaller basement unit with 1 bedroom. 4-bedroom units weren't as impacted, and that's a major part of total rents. So duplexes as a whole saw a much lower decline in rents of around 5 to 10%. The end result is that even though triplexes do have a slightly lower expense ratio, net rent yields, or cap rates we call it, got shot down and are now only at 4%. Duplex gross rents didn't drop as much, so now duplexes have the exact same cap rates at 4%. But now let's look at how things might look like if everything goes back to normal. If triplex rents rebound by 20%, we should see typical triplex cap rates bounce back to around 5%. Duplexes will see a smaller 10% bump in rents, so in the long run, duplexes will have a cap rate of around 4.5%. And so, if you're looking for better holding power, triplexes do have better long-term cash flows and might be your better choice if you're looking for a safer investment. Value add differences can also make a difference. I'd say there's less room for creativity for value add with triplexes, and you're pretty much limited to repairs and cosmetic upgrades. On the other hand, if you convert a single-family home into a duplex, it's more work, but you'll be able to reap better value-add appreciation here. So when we put all the pieces together, you can see that the total long-term returns are in fact better with duplexes because the higher market appreciation already trumps the lower cash flows. Then if you want to actively boost your real estate returns, there are also more opportunities if you convert a single-family home into a duplex compared to cosmetic value-add opportunities with lower ROI in triplexes. Now, are there other considerations besides ROI? Well, I'd have to say that triplexes have lower overall financial risk. First of all, it has better cash flows, which means better holding power. And I'd also argue that triplexes also have lower tenant risk as well. Like I mentioned before, a triplex is basically a box with 3 similar sized units paying similar rent. So if one tenant doesn't pay, you'd still be able to capture 2/3 of your total rent. On the other hand, if the upper unit in your duplex decides not to pay, then you'd be losing out on over 60% of your total rent, which would be a much harder hit. Your personal financial situation and your investment goals might also affect your property choice. If you're tight on income and that's your biggest concern when qualifying for mortgages, then you would want to choose triplexes with better rent yields, which would benefit your debt servicing ratio and help you get a bigger mortgage for your target property and also future properties as well. On the other hand, if you want to come up with a down payment for the next purchase more quickly and you're not capping out on your income qualifications, then a duplex would be better because it does have better market and value add appreciation, which means that you can refinance and take up more capital at a quicker pace. So from purely a number standpoint, if you're only looking at one property, a duplex is typically the way to go, but there can be other reasons why investors would choose a triplex over a duplex. I'd love to hear from you too, so let me know if there's other reasons why you would choose one over the other in the comments below. Our Elevate Realty brokerage specializes in real estate investments in Toronto. And if you're ready to get started, we're ready to help you out. Here's our process. We'll get to know you so that we can match you up with the best real estate investment properties on the market. Then we'll help you buy it, give you tips on how to renovate it. Then our leasing team can rent it out for you. And if you need property management services, we can help with that as well. I'll put a link on how to contact us in the description below. If you haven't done so already, remember to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to follow along with us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye-bye.